Good day, everyone. I'm sorry you can't see me. I have a bit of a technical issue, but I'll be going through the business plan guide. My responsibility is to take you through everything that you require to know about writing a business plan. I'd like to tell us that this class is a follow-up. All the classes we've had in the last 2 or 3 days, you're going to need a little bit of input from all of that to write your business plan. So I'd like to start by showing this is our outline and to define what business plan is. Now, a business plan is a complete description giving information about the products, services, marketing, and financing of a business. It's simply called a roadmap that guides a business towards its set goals and objectives. I usually use a very simple example, and if I would like to use the same example for you. If you decide you want to travel to Lagos and you want to travel by road, you have a car, a brand new car outside, you have fuel, you have the knowledge of how to drive, but you've never been to Lagos before. You start your car and you're heading to Lagos. If you do not ask for directions, if you do not use your Google map, if you do not have someone who has been to Lagos before to give you some level of direction, there is a very possibility you will not get to Lagos. And if you do get to Lagos, you might not get to Lagos in good time. You must have wasted time, resources before getting to Lagos. So the same rule applies with the business plan. The business plan is just a map, a roadmap that guides your business towards its set goals and objectives. Is a detailed description of the idea or the intention of the business owner or the business promoter. We always emphasize that the business promoter is you, the owner of the business. It's not the consultant, please. It's not the marketer. It is you, the owner of the business. You are the business promoter. How do you want to solve that problem? And as you solve the problem, you make money. Please, I'd like to emphasize at this point that the reason for going into business is not to make money. The reason for going into business is to solve a problem in a particular environment. As you solve that problem, you make money out of solving the problem. So who writes the business plan? It doesn't matter if you're a market seller, you own a big store. You, the owner of the business, the entrepreneur, writes the business plan. Who do you write it for? First of all, you write it for you, the owner of the business, the business promoter, because it's a guide for your business. You can also write it for a financing agency. For the example, many of you are on this platform right now because NISA Microfinance Bank says, attend training from an EDI, get a certificate before you can write your business plan. And therefore you are here in this class. So you sometimes can write it for a financing institution. If you have somebody who is interested in investing in your enterprise, the easiest way to convince the investor is to write a business plan. It tells the investor what you've done so far, what you're doing right now, and how you intend to use whatever funds that are coming. You can also write your business plan for a consultant to use. For those of you who have never written a consultant, I might probably need help in some areas. You need to do what we call a skeleton of your business plan. The skeleton of your business plan gives whoever is a consultant a good understanding of what you want to do, and therefore they can help you build up the business plan to whatever level you want it. So you who owns the business is the one that writes the business plan. The business plan is important for so many reasons. One of the reasons that it tells you, it helps us know the first steps as to where to start. It helps us bring our main idea into focus. It helps us work out what we want to achieve, how we are going to do it. It tells us if you have a market for your product. You can have a beautiful product and not have a market. You can have a market and not have a beautiful product. So it helps you think through the process of who is your market, who is your product, who is going to buy your product. I usually use a very simple example that not everybody is interested in your product. Not everybody is interested in your product. And if not everybody is interested in your product, even if they have the capacity to buy, not everybody will buy your product. Where you have people that are there are also people who are in the market but do not have the capacity to buy your product. So who is your market? You also helps you determine who is your competition. I'm sure at marketing class they dealt with competition. It tells you how much you need to start, what is your income, what is your expenses, how much profit will you make. It also tells you if your idea is worth pursuing or not. The business plan also helps you mitigate your risk. What it means is that you would have viewed what are the possible things that can go wrong. And as you identify those things, you look at how can I reduce these things to the barest minimum. I'll lastly say that the business plan is also used for communicating your ideas to interested party. Who is the interested party right now? NISA Microfinance Bank. We are looking for loans. I usually would tell people that this is a thinking process, the business plan assessment tree. It is a thinking process for your business plan. You should have thought of all of this before you start writing the business plan. You can also use it as a tool to evaluate if you've considered all the areas in a business plan. And it's basically a tree with 7 branches. The first is the executive summary, then the company, the market, the product and service, the management team, your strategies, and of course, your financials. So let's go through each of the branches. For executive summary, we're saying is a complete overview of what you are doing, what you have put down as a business plan. Is usually the first thing you see, but the last thing you will write. And it tells us from start to finish. If you're into an expansion business, where are you continuing to? It helps us understand the business plan in one page. The company is saying, who are you? What do you do? What do you offer? And what is unique to you? A simple example would be MTN. Everybody knows MTN is a communication industry. And when they came in, they were painting the whole town yellow. And as a result, what are they doing? They're trying to communicate to us that they want to be in every house. However, today, what are the things that MTN have invested money in? MTN is into production of rechargeable lamps. MTN is into shows now. MTN has a foundation that they are interested in helping people. But what did they start with? They started with just communication. So sometimes business. Also, very importantly is what is unique to you. What do people know you for? What stands you out amongst other people? That will bring me to markets, because your business must have a market. So who is your market? You'll be looking at 3 major areas. Who are your customers? Who are your competitors? And what is that unique selling proposition or unique selling point that you have? For customers, where are they? Who are they? What is their age range? What is their gender? More importantly, what is their income ability? If they are unable to afford your product, then people will not buy your product. I always like to use a very simple example. If you buy food, you can buy food. I am hungry is the problem you are solving. If you buy food in Mama Put outside, just outside a gate, maybe you'll be spending 300. You also walk into Chicken Republic and buy food of 500 naira, 600 naira. I can also be hungry, and I'm such a person that's busy. So I have to send somebody to order food from somewhere, and they go to Bio back and order food. By the time the food comes, you're spending maybe 2,500, 3,000, 3,500. But you are solving the same problem. I am hungry. So the income ability of your customers determines who buys from you, and it plays a major, it is a major factor when you're considering your product. Your competitors is saying, who are your obvious competitor? Who are your unobvious competitor? And why are they different from you? Unique selling point is what stands you out. You can be 4, 5, 10, 15 doing the same business, but there was something unique about you that makes people come back again and again to you. For product and services, we'll be looking at what is your product? What exactly are you bringing to the market? Is this something tangible or something intangible? Then how do you intend to use it? When do you intend to use it? And of course, what is the benefit? Why should anyone buy that product from you, whether tangible or intangible? I always emphasize that if you identify that your business was started with the intention of solving a problem, it is easy to identify the benefits of that product to the customers. Management team is saying, who are your partners? Do you require partners? What are the skills? What are the experiences within your enterprise? Who works with you? What is your skill? What are the skills of others? Do you require a partner at the level of skill? At the level of experience, who are you? Who are the others working with you? Do you also require a partner? And of course, more importantly, your track record. Most small businesses are not thinking about track record, and you need to think about track record if you are thinking sustainability of your business. So I use a very simple example. If you go to Abba produces shoes. Some years ago, they said they produced fake products. Now we have original products. What tells somebody from Abba to produce 1,000 shoes of a particular design? By the time the shoe comes, you see 100 different designs from one same shoe. So the point is, if you are going to create a track record as a small enterprise, it is important for you to understand that you need to maintain good manufacturing practice. You need to attain quality. And that becomes grow into a brand right now. What do you want to achieve? When do you want to achieve it? How do you want to achieve it? And as you're going to achieve it, this plan, is it a long-term goal? Is it a short-term goal? When are you going to achieve this, your plan that you have designed, your strategic plan? You will see on your screen that I have given some tools that you can use for your strategic plan. The most common we have is the SWOT analysis. I've also put the business model canvas on the screen. The business strengths, opportunities, aspiration, and results is called SWOT. They are all tools that exist. The last there is Grow Bridge Diagnostic Template. They are tools that exist that you can use to design a strategic plan. Financials is talking about how much capital exactly do you need in this enterprise? And of course, your capital is based on a prediction. There must be a baseline prediction that guides what your budget looks like. So how much capital are you looking at? What do you need? At what point is it that you make a break even? Nobody is owing you and you are not owing somebody else. Then from that point, whatever decisions you make, are you making profits or are you making loss? And of course, the cash flow, how much money is coming in and how much money is going out. I'm sure at cash flow, they told you that cash is the lifeline of a business. So these are things that you need to think about before you start writing a business plan. There are also tools that you can use to evaluate. There are also indicators you can use to evaluate your business plan if it's properly done or not. So let's look at the different sections in a business plan. The business overview takes care of 3 areas: the business details, the summary of the business, and your introduction. For business details, we are talking about basic information about you. Who are you? What's the name of the enterprise? What's your address? What's your business status? Are you a sole proprietor? Are you a limited liability company? Are you a partnership company? And the other details, basic information that tells us where to find you and who you are. The summary of the business is the executive summary, and that tells us in one page from start to finish of the enterprise. What are you doing? How are you doing it? And the different sectors all in one page. The reasons for starting the business, what are your products or service you're offering, and how do you intend to deliver it? This brings me to the introduction, and the introduction is saying, what is the aim of the business? They're giving us an overview. What is the aim of this business? What do you want to do? How do you want to do it? Why is it important for anybody to key into this enterprise you are running? And then what is the future that you see for the business? What exactly is this? What is the details of the product you are offering or the service you are offering? And what makes you different? Why should you be 4 in the same enterprise? Or 50 in the global market, or 1 million in the global market, and I keep coming to you? Then what is the advantage of your product? Like I said earlier, if you started the business on the basis of solving a problem, that becomes the benefit or the advantages of that product or service you are offering. So we'll look at market research. Now for business plan is majorly 80 to 90% market research. You are gathering information from everywhere. You are gathering information about your market. You are gathering information about your competition. You are gathering information about your environment, your supplier, the management. You're gathering information. Basically, that's what the business plan is. I'm putting it down. So for market, we look at what is the size of your market. What's your market size? Then what sector is the business into? There are so many sectors, but for NISA Microfinance Bank, they are looking at 9 sectors. So which sector are you? Are you in the agri? Are you in the ICT? Are you in education? Are you in the service industry? Are you in any of the industries? What sector are you? Then who is your target market? Out of this particular sector, you must have a target market. So let's use a very simple example. I'm a poultry farmer. I am located at, say, Wuse 2. I'm located in Wuse Market. So out of that environment, who is my target market? My target market are, I'm producing wholesale. So I'm looking at wholesale farmers in the poultry industry. That's my target market. Out of that target market, what is the size? The size is usually a particular percentage or a number of the big markets. So let me use the example of the poultry again. It is assumed that in Wuse, there are 2 million people in Wuse, and the poultry farmers, wholesale poultry farmers located in Wuse is just 200. So 200 is my target market. Out of that 200, what is the size of that market that I personally can deliver to? I think it's important to emphasize here that you cannot deliver to everybody. It's not possible. So you need to know what is the size that you can deal with. You can either use a percentage or use a number. So let's assume I'm using 50. 50 out of the population is my target market. Or I'm using 5% of the percentage of the population within that particular market. Competition is saying what products or services is competing with you. I'm sure Regina dealt very well with competition, both the obvious and the unobvious competition. And the basic question you're asking yourself is, what is your competitor doing right that you can leverage on? What is your competitor doing wrong that you will not do, but you will leverage on? And what's the competitor doing right that you can copy? So how are you different from your competitor? What are the products or services that your competitor have? Why should a potential customer buy from you instead of your competition? I would like to use a simple example and move on. We'll find out that today in Abuja, we do not have people going to Mr. Biggs anymore. But some 15, 20 years back, Mr. Biggs used to be the only eatery in Abuja. So today, there's no more Mr. Biggs because Mr. Biggs went to sleep. They forgot that there's something called competition. And now we have so many eateries out there offering different products and nobody goes to Mr. Biggs anymore. What is that telling you? You as a small enterprise, there is a lot of competition. There's alternative for your products. So how do you ensure that those alternatives do not take over your business? You are looking at the environment. A business is located in an environment and the environment can be good for you or the environment can be bad for you. So what is your business environment? Is it good for you or is it bad for you? Do you have government policies that affect the business? Are there political issues within your environment that affects the business? Are there even natural disasters, natural environments? The natural environment, is it beneficial to you or not? I like using a very simple example, rain. When it's raining season, a lot of businesses will tell you they are not doing so well because people cannot come out. There's a lot of rain. But there are some businesses that thrive better when the rains fall. Good example, the rice farmers, people in the agri sector. When the rains fall, your businesses thrives better because you have better products. However, for some businesses, it's a challenge. For the people that are into production of raincoats, people in the production of boots, people in the production of jelly bags, they make more money during the rainy season because that's when their products are needed. But for you who happens to be a business that requires people to come out, you may not do so well, particularly if you are doing a physical business. Political issues also can affect your business, and the question is, how does it affect you? That's the question we need to answer. Is it a positive effect? Is it a negative effect? If it's a negative effect, it's about mitigating your risk. What can you do about it? A very simple example is the printing industry. Every 4 years, there's election in Nigeria. So I expect anybody within the printing industry, anybody within the legal industry should make more money every 4 years, because there's election. Everybody wants to print on different things and on everything. Now, understanding that environment and taking that advantage of that environment is what you are interested in by looking at the environment. Supplier information is saying you need to get information about the supplier. Is the person going to give you credit? Is the supplier reliable? Can you find out if the way that supplier operates suits your own for your business to work effectively? And I would like to give an example with an SME. I have an SME that we relate with who happens to be in Lagos and produces bags. The lady produces school bags and food bags, food pack bags. And she uses our Ankara, our Adire to produce. She actually exports to African countries. Now, for someone like that, whoever is supplying must always be on time for her to meet the demand of her markets. If you do not produce your product on time, your customer will look for an alternative for you. So looking at your supplier information, are they reliable? Will they work for you? That's the question. Your marketing strategies, you are looking at what is your unique selling point. What is that thing that stands you out? It can be your quality. It can be your value addition. It can be your services. It can be your interpersonal relationship. It can be anything. But there must be something you must have identified that you are so good at that stands you out from other people, and that becomes your unique selling point. You also need to consider your 4 or 5 Ps. I'm sure Regina talked about the product, the price, the place, the promotion, and told you that all of it is centered around people. So what's your product strategy? That's what you're asking in your business plan. What's your pricing strategy? What's your place strategy? What is your promotional strategy? I always like to emphasize people strategy because you must understand your customer. If you understand your customer and you know what you can provide your service in the way your customer wants, you can retain that customer. It's called customer decision making pattern. If you understand your customer decision making pattern, then you can keep your customers. And I usually give a very simple example. If you make a dress or you make a kaftan, and the kaftan costs, say, 5,000 naira from start to finish, from material to design to packaging, everything costs 5,000 naira. If you take that product and you take it to Federal Secretariat in Abuja, and that is the target market you want to sell your product to, and you decide to sell it at, say, 6,000 naira, I'm sure you have a lot of people that might probably be interested in buying that product. But you take the same product, the same with quality finishing, you take that same product and take it to National Assembly or Senate building and say you want to sell that same product in that location, and that is your target market. You probably will not have people buy that product. Why? Because they'll come up with the idea that the product is fake, the product is too cheap. Are you sure this person didn't steal it? They come up with very funny reasons why they should not buy the product. But if you change the price of that product from 5,000 and say put 15,000 naira on it, taking the same product, you did not change anything, just the price. You may have more people interested in that product within that environment because that is the psychic of the people in that environment. So you must be able to produce your product in such a way that your customer is happy and willing to come back again and again to buy. And that's what we're looking for in your business plan. You are looking at your promotional mediums, and I always tell people that for small businesses, digital marketing is an asset to you. You can leverage on digital marketing. You get to a wider range of markets and at very little or no cost to you as compared to other promotional mediums. Pricing strategy and competitive business strategy is talking to 2 levels of business. For pricing strategy, we are looking at startups. For competitive business strategy, we are looking at existing enterprises that want to expand. When we talk pricing strategy, it means that you are looking at how much is your cost. Every product that exists has a cost of production. There's a production cycle for every enterprise, and the cost of production is from start to finish of the production cycle. Now, if you know your cost of production, all things being equal, anything added on top of that should be profits. If you understand that, it means you know how much your product costs and how much profit you can make. You also need to know your competitors' price. I'll use a very simple example. One of the clients that came, a poultry farmer, came and asked that she's having a challenge. She was a startup enterprise. She was having a challenge setting her price. And her reasons was because in the environment where she found herself, a fully grown bird cost 1,500 naira. Now, the question is, what is your cost of production? From her reply, her cost of production for her to grow at least one chick from one bird from chick to ready for market, it will cost her 800 to 900 naira. By the time she spends that on each bird, the bird is ready for market. So do you need to sell your price at 1,005? You can put your price at 1,002, 1,003 and leverage on turnover. It's called a penetration strategy. Now, for competitive business strategy, we are looking at you are already existing. So what do you need to do better? Do you have a pricing policy? An anticipated markup? Do you have a promotional plan? Is your choice of location advantage to you, your premises? Do you have a distribution channel? Your competitor strategy is also very important for you to know. What are the economic values? What are the political, social, legal factors within that environment that can affect your strategy that you have designed? Your ability to answer all of these questions will put you in the forefront to retain your markets. Let's look at operations, and under operations we'll be saying who is managing the business, what are the experiences and the skills, and who is in charge of what area. Production, marketing, sales, finance. These are your basic examples. And then employees will be looking at how many staffs do you need? What is their skills and their experiences? And what is the human resource guidelines that business? So let's deal with experiences and skills and staffs together. And I'd like to use an example to deal with that. Let us assume that I'm in the fish business. I'm a fish farmer. And as a fish farmer, I have an enterprise and I want to employ 2 people. The first person probably read Yoruba language, but has worked in a fish farm. And read agri-economics. Who would you employ in your enterprise? And the answers usually vary from each enterprise to the other, because some people will be, it depends on what the vision and the mission of your enterprise is that determines who you employ. Some people will want to leverage on experience, so they will employ the Yoruba graduate that has 10 years experience. Other people will be looking for new interjections of new ideas into the enterprise, and they will probably employ the fresh graduate, depending on what your vision and mission of enterprise is. So who are the management is dependent on your vision and mission. That's what determines who you employ and what do you look out for. Also, it's important for us to understand at this point that human resource guideline plays a major role in sustaining a business. I would like to use the example of Mama Ebo Rice, and she's located in Edo State. The last time I had the opportunity to be in Edo State before this last year was 12 years ago. And I went looking for food to eat, and I met Mama Ebo. She's a eatery. At that time, she had just 2 staff. She was under a tree. And she has a good quality of food. That's actually what she sells. Now, after eating the food, I was so satisfied, and I felt so good that I wanted to go back at another time to eat with her. However, I didn't get the opportunity to go back until after close to 13 years. So I went back to Edo State last year and went looking for Mama Ebo Rice with a couple of colleagues, 2 colleagues of mine. By the time we got to Mama Ebo, I found out Mama Ebo was still existing, and she has grown from the roadside eatery to a standard eatery like Chicken Republic. She has staffs of about 6 or 7 that works with her in that enterprise. But Mama Ebo is nowhere to be found anymore. It's just her picture that is in her eatery. So you ask for food, and I was given food. I asked for Mama Ebo specials. They said they have white rice, jollof rice. We asked for Mama Ebo specials, and they told us to sit down. They'll get back to us. We waited for close to 30 to 40 minutes. The food did not come. And what they said was that they wanted to warm the food. By the time the food now came, the food was not hot. They said they were sorry, they forgot it in the microwave. Now, the impression I got going the second time to Mama Ebo's eatery was quite different from the first impression I got, where the services was on time, the quality of the food was good, the food was hot. Where am I going to? Human resource guideline is saying, how do you educate your staff to pass the message of your products? How do your customers understand the message of your product through your staff, that the message of your product is not lost? I can assure you that if Mama Ebo does not do something about her staff, some 10 years from now, we may not have any Mama Ebo eatery. It's called Mama Ebo Rice anymore, because her staff is not delivering value to the customers. And that's what Human Resource Guideline is saying. How do your staff operate? What do you need to do to ensure that your staff is able to deliver the message of your product as is expected? You're also looking at your premises and your workspace. So where are you working from? Is it a large space or a small space? And does the place make you competitive? I always tell people there are two things you must put in mind: nearness to customer or nearness to market. If you choose nearness to customer, you must mitigate the fact that you are far away from your raw material if you pick nearness to customer. And if you decide to pick nearness to your raw material, you must mitigate the fact that you are far away from your customers. So ensure wherever you are makes you competitive. What are the machines? What are the equipments you will need? You need to describe them. Then how many days will they work? How many weeks will the machines work? Because this is a cost to you. It's called the running cost. You're also looking at the regulations. What are the regulations that guide? What are the licenses and permissions that you need to have to run your enterprise? Or if you're already running an enterprise, to expand your enterprise. And of course, what is the future prospect you see for that business? So let's look at the finance, which is the money part of the business plan. Now, we'll be looking at the startup costs. What are your capital expenditures? What is your cash flow forecast, profit and loss projections, your balance sheet? And I said appendices is anything else I did not talk about, but you know it's important to demonstrate that you are a professor in this particular enterprise you are talking about, or you're writing your business plan on. So let's familiarize ourselves with some basic information we already know, but I expect that let's do a quick recap on it because we need them when writing the financials of the business plan. You need to know what is an asset. And an asset simply is a resource of economic value that an individual owns. An asset is a resource with economic value that is owned by an individual or a corporation or an enterprise or whatever. Limited liability, your liabilities is a company's debt. Is saying, how much do you owe? That's what liabilities is speaking to. And owner's equity is saying, how much do you owe? What's your total assets? I always tell people that to understand your owner equity, it is total assets minus total liability. Owner's equity is total assets minus total liability. So for a quick example, you have a fish farm, and your fish farm, you already have equipment installed. You have your tank, you have your pond. And let's assume that the cost of producing the ponds is 400 naira. However, the person that made that pond, you have not paid that person. You have a balance of 50 naira to pay, that person that made the pond. How much your owner's equity will be 400 naira minus 50 naira. So your owner equity value is 350 naira. Please, it's important for you to know, because on the NISAL platform, they will ask you what is your total equity when you are doing your business plan. And you need to be able to put a value that is realistic to that. Also, there are some basic informations we also need to look at, which is cash flow statement. When Philip was taking the bookkeeping, he talked about the cash flow. And this is speaking to what? How much cash do I require to run my business? That's a question you are answering. For income statement, you are saying, what is the financial position of that company or that enterprise? Is my company making profit or loss? So the question you're answering is it a profitable business or not? For balance sheet, you're looking at how much debt do I have? How large is my assets? That's what you are looking for when they ask you for a balance sheet. So you're trying to know value of assets and how much debt do you have. A report of all firms' transactions that involves cash is your cash flow statement. And the key elements in the cash flow statement are two: money coming in and money going out. A cash flow statement basically compares the sum of the revenue to the sum of the expenses on a regular basis. And there are two ways to compute that information. One is the direct method. The second is the indirect method. Now, I've listed three things here that every business that runs effectively must use. And I've given examples of activities under that fits into the cash flow. You have the operating activity, you have the investing activity, and you have the financing activity. These three things you do in running a business. And I've given examples of each. The first one is operating activity, and receiving cash from a customer is an example of an operating activity. For investing activity, you have a property, a plant, or an equipment. Whether you are buying or selling is an investing activity. Then financing activity, an example of a financing activity is to obtain or to repay a capital. For an example, the money you borrow from a creditor, or you are repaying a principal loan. That's an example of a financing activity. I've also gone further to place these activities in cash in and cash out with examples. So if I'm buying goods and services, that is a cash in. If I'm buying, that is a cash out. But if I'm selling, sales from goods and services is cash in for me as an entrepreneur or as an enterprise. While paying salaries will be cash out. Sales of a property, plant, or equipment is an investing activity, while the purchase will be an outflow for me. Now, for the sale of common or preferred products will be inflow also for me, an example of a financing activity that is inflow, while for outflow will be paying debts or dividends. We need to be able to identify these inflows and outflow within the operating activities to be able to develop our business plan. So what is revenue? Sales is an example of revenue. Interest from a firm's investments. Some businesses are doing so well, particularly businesses that are already existing, that you can afford to invest money in other things. It becomes a revenue to you. Royalty and licensing payments from appropriate use of firm's intellectual property is also a revenue for you. I like giving a very simple example. Sonny Ade. I'm sure quite a number of us know Sonny Ade, and he has sung so many songs. And each time people use his songs, some level of royalty or license payment is made to him. For those of us that have disruptive ideas, ICT disruptive ideas, if you are able to get some level of patenting for that product, anybody who wants to use that has to pay something to you for your intellectual property. So it's some level of revenue to you. Now, another inflow, cash inflow, is your revenue that is obtained from borrowing money. I would like to emphasize here that NISA Microfinance Bank loan is an inflow in terms of cash for you, but it is not a revenue. Why? Because it's borrowed money. You need to repay the loan with an interest over time. But is it cash inflow for you? Yes, it is. So let's look at the expenses. We have looked at revenue. Let's look at expenses. And what are the things that are expenses? There are two types of expenses: fixed cost and a variable cost. What is the basic difference between the two? And I've listed examples there that you can see. For fixed cost, it does not depend on the number of units of products that you produce. That's the major difference. For fixed cost, it does not depend on the number of units of products you are producing. So if you're into production, your fixed cost does not affect your production. However, for variable cost, it depends on the number of units you are producing. As those change, the number of products you make at the end of that cycle also changes. So for an example of fixed cost, I've placed rent payments as an example. Salaries for employees, an example of a fixed cost. And for variable cost, you see your raw material is a is an example of a variable cost. Supplies is an example of a variable cost. But what I would like to emphasize that I want us to carry from this particular slide is fixed cost does not affect your production. You need it, but it doesn't affect your production. Variable cost, you need it and it affects your production. So let's translate all of that into figures. At location now, location is no longer a place, because the earlier part of this business plan, you had explained where you are located, what you are doing. At this point, location is rent or is lease. Those are the options that NISAL gives you. You're either renting a space or you are leasing a space, to be land. So it's a cost, it's naira and kobo for you. Fixed assets and equipment, you will list all the fixed assets or equipment you have, whether you are buying or you already have, the number you require if you are buying, the cost per unit, and of course the total cost. You're also looking at your personnel plan. On their personnel plan, they are telling us what are the qualifications and experiences they have, who is the boss and who is next, how much are you paying, and how much is the annual salary. One of our clients that did a business plan online, your business plan now, remember for NISAL Microfinance Bank is online. One of our clients that did a business plan at one point in time during one of these programs was a poultry farmer that was interested in raising a poultry of 700 birds. And they asked her, how many staff will you use? She said she's going to use 7 to 8 staff to run a poultry farm of about 700 birds. She was looking for 5 million. That was the loan she was looking for. Actually, that program was even a grant. She was looking for 5 million. And by the time she justified what she wanted to do with her financials, she said she's going to spend about 2 million to secure her assets. What does securing her assets mean? She wants to buy the land. She wants to fence the space where the poultry farm will be located. She was using Buhari as her location, which is fair to some level. So 2 million out of 5 million, she's using it to buy land and secure the poultry farm and build the pens. Then we now asked how many staff. She said she wants to work with 8 staff. The question now is, how much will you pay your staff? And she said she's paying her staff 20,000. For one staff, particularly if the staff is skilled, it may not be too much to pay a staff. However, if you translate that in terms of numbers, it's quite a large amount, because what she has said is that she wants to pay each staff 20,000, meaning that she's paying 160,000 per month to her staff. And if you calculate 160,000 per month to her staff times 12 months, that's about another 2 million. It's about 1,920,000 naira. So you are asking a financial institution to give you money of a loan or a grant of 5 million. You want to use 2 million to secure assets. You want to use another 2 million to pay staff, which is overhead. How much are you going to run the enterprise with? What happens to the beds, purchase of the beds? What happens to the medicines? What happens to feed? So you find out that from what she has done, she has not done a very good job to her financials. Why am I giving this example is, whatever stories you write in the story part, make sure your story ties with your financials. It's important that there's a correlation between what you have written for business plan. If not, your business plan will not fly. You're also looking at raw materials. What are the raw materials you require? For the example on the screen, you see I said quantity of 2 months, but I always advise use your production cycle, because each product has its own production cycle. For somebody who is in the fashion industry and you are making clothes, well, 1 week will be probably a good production cycle for your product. However, somebody who is in animal fattening, who needs to buy a calf and grow the calf up to maturity, that the calf now starts producing, say, milk, you're going to need at least 6 to 7 months before your product is ready for market. So your production cycle for the animal fattening is far longer than the person who is producing dresses, for an example. So please, your raw material should be dependent on your production cycle, not on 2 months. If your production cycle is less than a month, 2 months will be good. But if your production cycle is 6 months, where are you going to get raw material for the next 4 months if you use 2 months? So emphasis is on your production cycle, and of course that is a cost. You're also telling us if your raw material is produced locally or if it's going to be imported. For the example of people in the fish farm, some people use locally compounded foods. Some people import their fish feed. So you please tell us which it is in your business plan in terms of your figure. Now, for project investment cost, it's just a combination of what I've spoken to you so far. The fixed cost, you are giving us fixed cost and equipment, the total. Raw materials for your number of production cycle. For mine is 2 months. I'm giving you a total. And then salaries and wages for the period you want the salaries and wages to be paid. I'm using 3 months. Some people use 6 months. Some people use 12 months. It all depends on you. And then pre-operational expense. Pre-operational expense is different for each enterprise. However, there's one pre-operational expense that is common to everybody, and that is market research. The addition of all of this make up what we call the project investment cost. Now, project investment cost, why we put it there is you must understand that if you are looking for a loan, you must ensure that the total project investment cost is not more than your loan. Once it is more than your loan, it will be difficult for you to repay that loan. Sales projection is saying what is the number of products that you are making, what is the price per unit depending on your production costs, what is your total sales, and of course, if you know what your sales is for 1 month, you will know what your sales is annually. You also need to demonstrate that you are aware this is a loan, so I need to work out how I want to repay the loan. So let's look at our financial plan. Remember, I talked about owner equity earlier on, and this is an application of it. For NISA Microfinance Bank, you do not have to have equity. However, for existing enterprises, it means that you have some equipment, you have some investment that is already on ground. So the addition of all those investments minus your liability makes up your owner equity. For this slide you are looking at, I'm saying I have an equity of 30%, which means all my investments and my assets make up a particular amount that amounts to 30% of the loan I'm looking for. The bank should give me 70% of my loan. If you do not have any equity investment, NISA Microfinance Bank allows you to take 100% loan. You also need to work out how you are going to repay the loan. For what I have on the screen, I'm just trying to demonstrate to you how to work out a reducing balance, how you consciously think about repaying a loan. Installation is what I decide by myself to pay back depending on how much sales projection I have made per year. My loan outstanding is what is left of the loan I have taken. The interest is the percentage that the bank will take automatically based on the agreement with them. And then the total repayment is what I'm paying per year. So what am I saying? My total loan is 27,000. I like to keep the figures simple so that you understand the principle. Once you understand the principle, you can apply it as you like. So loan outstanding is 27,000. Because this is the first year of my loan, I am not paying any installments. I am not paying any interest since there's a moratorium period, and therefore my total repayment for year 0 is 0. For year 1, based on my sales projection, I feel I can pay back 2,000 naira conveniently before the loan interest starts. And therefore, if I pay back 2,000 naira, my loan outstanding as at the time of interest calculation will be 25,000. Now, this particular loan you can see on the screen was calculated at 20% interest. Therefore, 20% of 25,000 is 5,000 naira, which is my interest. What does that mean? At the end of the year 1, I have to pay the bank back 7,000 naira. 2,000 naira installment plus my interest of 5,000 naira. For year 2, my business is doing better, so I feel I can pay back 5,000 naira before my interest dates. Meaning that what is left of my loan is 20,000 naira. If you calculate 20% of 20,000 naira, it is 4,000 naira. So my second year, I'm paying back 9,000 naira as my total payment for my loan. If you do that for 5 years, by the end of the 5th year, your loan becomes 0 and you have paid back the complete loan with the interest. But for NISA Microfinance Bank, for as many of us that are interested in the NISA Microfinance Bank loan, this is their loan structure. For NISA Microfinance Bank, on their portal, you are going to have to click business plan. We would explain that at the end of the class. But I just want us to understand how the loan is calculated. You have to indicate, if you are using the simplified credit platform, it will ask you questions, it will prompt questions at you. And as you answer the questions, the software in that simplified credit will calculate your loan repayment structure for you. So it will ask you the question, how much loan are you taking? 1 million. What's the annual interest rate? 9% or 5%, depending. What is the loan period that you want the loan? Do you want it in months? How many months do you want it? Some people will do monthly, some people will do bi-monthly, some people do yearly, some people do bi-yearly. It depends on you. You pick the number of months that you want the loan to be repaid. That it will also calculate the number of repayments you need to do based on the period you decide that you want to use for your repayment. So let's say we do monthly, 5 months. My repayment yearly is 5 times. It will ask you, do you want a moratorium period? You answer yes or no. If you answer yes, it calculates a moratorium period for you before it starts your repayment structure. If you answer no, it starts your repayment structure for you immediately. These questions you can see, the information you can see in the first column of my screen are basic questions that the NISAL business plan templates page would ask you. And as you answer the question, it automatically draws out a repayment structure for you and how much you are repaying per month. And usually this loan is done at a compound interest. So let's do our income statement. It's called projected 5-year income statement. At this point, we know what our sources of sales are. So we know what our sales projection for each year is. I have used 2 sources of sales, meaning that you have 2 sources of income. Let me use a very simple example. I am producing birds and I am selling eggs. I sell birds and I sell eggs. Those are 2 sources of income. If you have only 1 source of income, that one source of income makes up your total sales. If you have multiple sources of income, the addition of your multiple sources of income makes up your total sales. And that's how you get your total sales for 5 years. Now, for cost of goods sold, remember that we had spoken earlier that there are 2 methods for calculating expenses. The direct and the indirect. It's called direct and indirect or other direct method, depends on what you are using. So you give us the total direct cost and the total indirect cost or other direct cost. Remember the difference between the 2. Your direct cost is cost that is required that directly affects production. And a good example will be your fixed cost. Will be your variable cost. Direct cost is cost that directly affects your production. And a good example will be your variable cost that I had listed earlier. While other direct costs or indirect costs are costs that you require, but it does not necessarily affect your production. And a good example will be your fixed cost that I had earlier shown you. So the addition of direct costs plus indirect costs will give you your total cost of sales. How do you get your gross profit? Total sales minus total cost of sales. Total sales minus total cost of sales gives you your gross profit. You will see on your screen that I put something called expenses there. Now, for those that are not professional business plan, you're not a professional in writing business plan. There are some expenses sometimes that you don't know whether it's a direct cost or an indirect cost. So list all those expenses under expenses. So you have expense 1, expense 2, and expense 3. The addition of the 3, 1, 2, and 3 makes up your total operating expense. Now, if you know your gross profit, and you know your total operating expense, to get your operating profit, it is gross profit minus total operating expense. Gross profit minus total operating expense. It will give you your operating profit. Now, operating profit is where you are going to. If you are very good in business plan, you can divide all your expenses to direct or indirect costs, and the addition of those 2 gives you a total cost of sales. So now we know our operating profit. I put interest expense outside the box, and I put my corporate tax outside the box because they are 2 things that, whether I like it or not, government will take. Remember, Mr. Abdul Malik, Oga Abdul Malik had guided you as to how to calculate your tax. So here we're saying, depending on the sector of the enterprise and how much you have made, I'm assuming that for me, My tax is 30% of my operating profit. Whatever 30% of my operating profit is, I have to know it. Then the interest on my loan, I also brought it out. Remember, we had calculated it earlier, so I just brought that figure here. How do I get my net profit? Total operating profit minus interest expense minus my tax gives me my net profit, which is what comes back to me. I have done this because it is easier for people who has not worked on business plan before to understand how to calculate it this way. And your ability to do this, you do this for 5 years, gives you your projected 5-year income statement. And this is an example of a financial template for 3 months for an existing business. You will see that for income, excuse me, you will see that for income, he indicated invoice sales in terms of cash. He indicated trading cash receipts, which are some of the things that Philip spoke to you, and any other source of income that you have. And the addition of all of that, plus his personal family and friends funds, makes up his total cash receipts, which is 1,625,000 naira. That is A, your total cash receipts. Now, B, to get B, it will be all your direct costs plus your indirect costs plus your other expenses, which is what you see on the screen. He listed his direct costs, he listed his indirect costs, and he also listed his other expenses. And the addition of all of that gives you your total cash paid out, which is 1,309,500 for the first month. And you see that the position of cash at the end of that month is 315,500 becomes his cash position as at the end of that month. If you do this for 12 months, at the end of 12 months, you will have a income statement for a whole year. So I just put that there for an example so that we are able to relate with it on the basis of figures. So let's look at our cash flow statement. Now remember that cash flow statement is what tells us if your business is healthy or not. And what are the 2 things you need for cash flow statement? Your cash inflow and your cash outflow. So let us apply a little out of what Philip told us. He told us that inflow minus outflow gives you a balance. And it's the same principle that is being applied when you are doing your cash flow projection. You need to identify all your inflow, you need to identify all your outflow, and the deduction of both gives you a balance. So for inflow, we have sales. We know what our total sales projection is. You put it there. Your total equity, if you have, becomes an inflow for you. The loan you are taking, I told you, is an inflow for you. So that becomes part of your inflow. The addition of the 3 makes up your total inflow, which is also called your total receipts for the first year. For outflow, you'll be looking at assets you have purchased. You have listed them there. Please, you put the costs there. Pre-operational expense, you also put the cost, which you already know there. For salaries and wages, for whatever number of months you are considering, you also put it there. Raw materials, depending on your production cycle, you put for a year. Sales, marketing, and other expenses. During Regina's class, she must have told you promotional mediums. She must have told you about packaging and all other things that you should do to make you stand out amongst other people. It is a cost to you, so you make that part of your other cost. Then your loan repayment and interest. At this point, you're going to be repaying the loan, and you've already calculated how much loan you'll be repaying per year. So you are bringing in that cost also in here. I also put what we call others. Others is anything else that is peculiar to your own enterprise that I have not spoken about, but is an expense to you. There is money going out. You add those things as others. Please, I would like to emphasize here that please, nobody should put miscellaneous as part of others. Let your miscellaneous have a name. The addition of all of this makes up your total expenditure. If you know your total receipts and you know your total expenditure, how do you get your net cash flow? Total receipts minus total expenditure. Total receipts minus total expenditure. It will give you your net cash flow. Once you know your net cash flow, you see under the net cash flow, there are two things there: net cash brought forward and net cash carried forward. I usually like to use the example of a startup and an existing enterprise. If you are a startup, you have nothing to carry forward because you did not exist before. So your net cash brought forward for the year 1 or for year 2013, as you can see on the screen, will be 0 because you do not exist before. But if you are an existing enterprise, there is a net cash flow that you had for last year at the end of the year. That net cash flow becomes your brought forward for year 2013. So for the purpose of an example, let's assume that we're talking to a startup enterprise. The net cash flow for 2013, let's assume it is 1 million naira. The net cash brought forward for that year 2013 will be 0 because you do not exist before. Therefore, your net cash carried forward becomes what? Net cash flow plus net cash brought forward, which is 1 million plus 0. Net cash carried forward will be 1 million for year 2013 if you're a startup enterprise. For year 2014, you do the same process, and then you get a net cash flow. Let's assume your net cash flow for year 2014 is 1,200,000. Because you have a net cash carried forward from 2013 of 1 million, that automatically becomes your net cash brought forward for the year 2014. Therefore, net cash brought forward for 2014 for you is 1 million. And net cash flow that you got for that year is 1 million, 1.2 million. Your net cash carried forward for year 2014 becomes 2.2 million, which is 1.2 million plus 1 million, giving you 2.2 million. So the 2.2 million is your net cash carried forward for the next year, 2014. That carried forward becomes your brought forward for the year 2015. And you keep doing that until you have done your projection for 5 years. Your ability to do this, you would have achieved your projected cash flow for 5 years. I hope what I've said so far is clear enough. And with that, I would like to take questions if there are any.
All right, ladies and gentlemen, that's the end of the class. Open now for questions and answers. If you have a question, you know what the rule is. Put up your hands and I will take the questions. But before that, we are going to run the poll, just like our manner is. We expect everybody to take part in this poll. It's up on your screen now. Please, we expect your response to enable us to serve you better.
Okay, so while we wait for questions, I would like to quickly share a different template. And the template actually is to help you when you are doing your business plan on the NISA Microfinance portal. The business plan that you are writing for NISA Microfinance portal is questions and answers. You cannot attach your own business plan. You have to type in your answers on the NISA Microfinance Finance Bank portal. And I would like to share this screen so that we get to understand the kind of questions that will come out while you are working with the NISA Microfinance Bank business plan template. Okay, so let's share this. Can we see what is on your screen? It's just a 3-page template of basic questions. The NISA Bank template is a question and answer. So what we have done for the ease of understanding and the ease of doing the business plan is bring up some questions that will come up there, and you need to have answers for it before you go to the portal. So you can see on my screen, it's talking about your company name, phone number, email, which are basic information that tells them where to find you, your address, your the name of founder, the state of origin of the CEO, the business type and business industry, owner structure. It is going to ask you for your BVN. It will ask you whether your business is registered or not. I would like to emphasize here that if you want to access NISA Microfinance Bank loan, if you do not have a registered name, you cannot collect more than 500,000. you are allowed to collect the loan, but you cannot take more than 500,000 naira. But if you have a registered name, whether it's a sole proprietor or a limited liability company, then you can access up to 10,000, up to the 10 million naira, sir, or ma. So you must have a registered name to be able to access a lot of money. If your business is not registered, you are still welcomed for the loan, but you cannot take more than 500,000. It will also ask you the date of registration. You should list 3 competitors in your immediate environment. It will ask you description of your product or service. It will ask you the description of your product and service, the price you are selling, and what is the price of your competitor. You need to put it as part of your business plan. It will ask you basic information about your management, what is unique to you, how do you sell your products, the cost of producing, what is the history of your company, what are the features that you see, what actions will you take if your business is not progressing. Now, this is very important. At this point, it will ask you in terms of financials, in terms of figures. You are doing a projection and how much are you going to sell. After you have done all of that, it will now ask you, if you do not achieve that, if that action you took is not progressive, what are you going to do? And you're supposed to type in a response based on the reality of your enterprise. It will ask you your assets and equipment and other information as I've shown on the screen. It is also important for us to know, for as many of us that are interested in the NISA Microfinance Bank loan, to understand that they expect you to run your enterprise. They're not giving you, your enterprise is not run based on a collateral. You're not bringing any collateral for AGMIS loan. Therefore, your collateral is your equipment. So they usually will tell you that there's a 25-75% rule. What that means is that you can take 75% equipment, 25% working capital. The only people that they do not insist on that term rule for is people that are in the agri sector. And the reason is because in the agri sector, they require more working capital than equipment. So if you are in the agri sector, agri processing, agri value chain, you can do 20, you can do 50, 50, you can 55, 45, which means 55% working capital, 45% equipment. But if you're in other sectors apart from the agri sector, you are expected to have 75% equipment and 25% working capital. That's your equipment, like Philip told you, becomes your security for your loan, because they will be the one to send the money directly to the people that is providing that equipment. They will not give you the cash for your equipment. But for your working capital, they can give that to you since that is required in the enterprise. So it's important for us to understand this. I would also share this particular guide. I'm going to share it on the WhatsApp group for everybody who is interested so that you can go through it properly and understand some of the basic questions that you will be expected to answer on your business plan. But like I always tell people, you must have thought through all of the process. If not, answering these questions can become difficult to do. There are 2 templates that NISA Microfinance Bank offers you. One is called the loan repayment, and the other loan upload, and the second one is called the Simplify Credit. I usually advise my participants that use the Simplify Credit. Why? Let me tell you the difference between the 2. For loan upload, if you click it for your business plan, it will drop you questions. And as it drops you questions, you are answering those questions. But it does not have a software inside of it that will help you do your risk analysis, that will help you do your financial projection, that will help you do your accounting process. You do everything yourself. But for the Simplify Credit, it will ask you to pay 5,000 naira online. So you are paying 5,000 naira on the portal to Simplify Credit using your internet banking or your ATM card. And as you pay, immediately the money is deducted. It drops you the template. That template evaluates you stage by stage. It will keep evaluating you 10 of 100, 20 of 100, until you get to 100% before you submit your business plan. It is also important for me to emphasize to you that when you are doing your business plan in the portal, It will ask you the two questions. There are two questions that are pertinent that I did not speak to in the business plan, but it will ask you. The first question is that it will ask you to give a guarantor, a name and a phone number of at least guarantors in the business plan under the simplified credits. The second is that it will ask you to upload your picture. Now, if you're a startup, it will only ask you to upload your picture. But if you're an existing enterprise, it will ask you to upload your picture and the picture of your enterprise, you in your enterprise. You have to upload that picture. Those are the last questions it's going to ask you after all these other questions that we have talked about. Are there questions for